Have you ever wondered what happens when America's closest ally decides it's had enough? Right now, Canada is tearing up the old rulebook, signing billion-dollar deals across Asia and Latin America, siphoning off global investors, and quietly rewriting the balance of power in North America. Meanwhile, U.S. businesses are sounding the alarm, consumers are bracing for price shocks, and Washington's once unbreakable grip on trade is slipping fast. Could this be the biggest economic own goal of the decade? Or is there a hidden strategy no one's talking about? Stick around, because we're diving deep into how this seismic shift is unfolding, who stands to win, who's about to lose big, and what it all means for the future of global trade. Let's get inside the story. For decades, the trade relationship between the United States and Canada was the envy of the world, an ironclad economic alliance rooted in geography, history, and deep mutual trust. A staggering third of Canada's exports flowed south across the border, fueling American industries and strengthening bonds that seemed unbreakable. But that era may now be history. Over the last 2 years, Washington's trade policy has taken a radical, and some argue reckless, turn. Under President Trump's intensified second-term strategy, tariffs once used as surgical tools have become blunt hammers. Steel, aluminum, automobiles, all targeted by draconian import duties that at one point doubled overnight. What was once a stable, predictable trade corridor turned into a labyrinth of uncertainty. Yet here's the intriguing part. As America digs deeper into protectionism, Canada is rewriting its destiny. Canada's strategic breakaway? A calculated risk? Canadian Prime Minister Mark Carney's icy statement in Washington last year, "The old relationship is over," wasn't just a press soundbite. It was a declaration of economic independence. Behind closed doors, Canadian officials had grown wary of relying on a partner whose trade rules could change with a morning tweet. Is it any wonder then that Ottawa accelerated deals across the Pacific and into Latin America? When Canada inked a sweeping economic partnership with Indonesia, a nation of nearly 280 million people, it wasn't dabbling in diversification. It was laying the groundwork for a future less entangled with the volatility of Washington. And what did this deal include? A staggering 90% reduction in tariffs across sectors from mining to tech. At the same time, Ottawa didn't just talk up the Indo-Pacific, it backed it with a $2.3 billion strategic package, effectively planting a long-term flag in the region. But here's a question worth pondering. Is Canada simply hedging against U.S. unpredictability, or is it quietly positioning itself as the new North American trade nucleus? Meanwhile, in America, tariffs, letters, and looming costs. Back in the U.S., the mood was far from celebratory. As tariffs surged, first to 25%, then a jaw-dropping 50% on some Canadian goods, business leaders from Michigan to Missouri penned desperate letters to the White House. The auto industry warned of sticker shocks in the thousands of dollars per vehicle. Steel distributors watched their margins bleed out as costs spiraled. Mill workers fretted over pink slips. Farmers, too, from citrus groves in Florida to bourbon distilleries in Kentucky, found themselves trapped in a crossfire of retaliatory tariffs and lost Canadian markets. It begs the question, who exactly is winning here? Are these tariffs protecting American jobs, or are they simply rerouting global investments elsewhere? The early data is telling. While U.S. foreign direct investment, FDI, dropped by 28%, Canada saw an uptick of 9%, buoyed by foreign firms looking for a safe landing spot amid the American trade turbulence. Canada's masterstroke, selling predictability in an uncertain world. Let's not kid ourselves, global capital is cowardly. It flees from drama, uncertainty, and erratic policy shifts. When Trump blindsided markets by hiking steel tariffs from 25% to 50% overnight, it wasn't just foreign producers who panicked. Domestic buyers scrambled too. Canada, sensing opportunity, rolled out a simple but razor-sharp marketing pitch. We create predictability. Unlike Washington, Ottawa wasn't just using this as a PR slogan. It became a foundational plank of their diplomatic and trade strategy. As a result, tech giants, battery manufacturers, and critical mineral investors began planting roots in Canada that might have otherwise gone to the U.S. Consider this. If you're a CEO weighing where to build your next factory, would you choose a country prone to economic whiplash or one that makes long-term planning feasible? The $214 billion thunderclap, Canada redefines its global game. Perhaps the biggest political bombshell came with Canada's colossal $214 billion trade pact spanning Asia and Latin America. It was more than just paperwork. It was a signal flare to the world's supply chains, saying Canada is open for business, with or without Washington. From green energy collaborations with Europe to AI development agreements with Japan and Australia, Canada is threading itself deeper into the global economic fabric. Meanwhile, American companies have to grapple with sudden tariff spikes that can gut their supply chains overnight. Political analysts are calling America's trade retreat the biggest policy blunder of the decade. Not only has Washington penalized foreign producers, but it's also forced its own domestic industries into scrambling for new, often costlier solutions. Pause for a moment and ask yourself, could these aggressive trade walls ultimately dismantle the very manufacturing base they were meant to protect? Winners, losers, and the hidden stakes. Let's be clear, not every sector in the U.S. is suffering equally. Some domestic producers, shielded by tariffs, may enjoy short-term bumps. But the medium to long-term price tags, lost partnerships, disrupted R&D ecosystems, fractured supply chains are looming threats. Meanwhile, Canada's transformation is unmistakable. Once heavily dependent on the US, it's now actively marketing itself as a neutral ground where European and Asian players can converge without the shadow of sudden protectionist backlashes. Even in critical industries like batteries and advanced manufacturing, Canada is vacuuming up billions in new investments. And that's not merely coincidence. It's the byproduct of carefully choreographed trade diplomacy. So here's a provocative thought. Is America's inward turn inadvertently forging Canada into the new linchpin of North American and Trans-Pacific commerce? The bigger geopolitical gamble. Who shapes the future? There's also a broader geopolitical undercurrent here. As the US tightens its economic walls, countries like China and blocs like the EU see fresh openings to partner with Canada. Critical mineral deals, green energy grids, AI alliances, these aren't just about money. They're about shaping the technological and strategic map of the next 50 years. If America's economic strategy continues to hinge on abrupt tariff hikes and transactional brinkmanship, the long arc of global commerce may bend away from it toward more stable players. And that's a chilling prospect for Washington. What's next? And where do you stand? So, where does all this leave us? In the short term, yes, some U.S. industries will feel cushioned by protective tariffs. But as Canada entrenches itself deeper into multi-continental networks, America risks watching its closest ally become the very competitor it once never feared. Which brings us to the real question. In this high-stakes game of trade chess, who's truly thinking 3 moves ahead and who's just reacting out of panic? Now we want to hear from you. Do you think America's aggressive tariff regime is a strategic masterstroke or a self-inflicted wound? Is Canada right to diversify so rapidly, or could this come back to bite them? And in your eyes, who stands to shape the next era of global trade?